your position.
This call is now being recorded.
Thanks. Now, what happened, business partners, is that I previously engaged with you with regards to the advantage of trading the signature strategy under sub-bin mode real-time settlement. That is just signature SPM, RTS, for instance, which shows you that after the market has gone down, for instance, you have an opportunity to still continue to trade that same coin and in the dip using the sub-bin positions, for instance. These sub positions starts from number 5, 6, 7 upwards. It goes up to 999 actually. So, but now with that being highlighted, it's important to understand that in the pair or in the currency that you are trading, you will see at the upper part of the transaction page that you have average price. The average price that you have here is for the whole quantity here. Is for the whole quantity in relation to the whole position, you know, which is position amount, so to speak. The position amount here you can see is always in USDT. It means the amount of dollars or USDT that you have used to purchase the quantity that you have here. You see inside the brackets, the quantity is shown clearly that is YFI. And even when you are to check on the pair, you can see that the pair is YFI stroke or slash USDT, for instance. So I always highlight that the currency on the left-hand side is called a base currency, and the one on the right-hand side is a code currency or a pricing currency. Therefore, because our base, our code or pricing currency is USDT, so it means the amount you see here is USDT, and the amount you see here, it's USDT. When you think of price, it is that currency on the right-hand side, the code or the pricing currency. You are in business, you ask for quotation, you are looking for price, you know, so it is just as simple as that. So now, this amount of money, which is $1,522, is the position amount for the whole position. And then with that $1,522, this quantity was bought or acquired by the bot for you inside your exchange. And you can see this trades from, it is trading on the top left corner there. It is trading inside Binance in this regard. So now what is happening is that current price is the price as per the market. It means it's the price of the asset now. But average price is the price that determines the number of times that the buying transaction were taken, and then for all this money to be eventually put into the position. If you bought 5 times like here, and you can even say 6 times, including the first, starting with the first buying amount, for instance. If the robot put the first buying amount and it bought 5 times, up to 5 times again, so it means the amounts of monies, of USDT's amounts that were brought together, divide by 6 will give us this average price. So now you know that averagely, the price, this asset, this quantity was acquired for you according to the price that is here, which is $6,676. However, the market is no longer up there. The market dropped to $5,907. And with that being highlighted, it means there's been a depreciation. And that depreciation is according to your return rate here. So on the return rate, it can either be negative percentage or a positive percentage. When you see a negative percentage, it simply means that you are in a floating loss. But when you see a positive percentage, it means you are in a floating profit. So in this regard, we are having a floating loss. It's not a real loss, it's just a paper loss. It will only become a loss if you sell now. But you're not going to be selling now, for instance, because the robot will never close your trades in the negative, which is something very important. At the moment today, people who bought Bitcoin yesterday, all of them are in the floating loss because Bitcoin is no longer up where it was, it is now down. So everybody who bought Bitcoin yesterday or an hour before the fall happened, all those people are in a floating loss. It doesn't matter. Everybody who bought Bitcoin yesterday, for instance, they are all in a floating loss. But what will determine their profitability over time is going to be the strategies that they apply and the method that they are trading with, for instance. So very important. So now I said we trade, our strategy mode is under sub-bin mode, real-time settlement, so that the sub positions we're able to buy and sell them in real time and collect profits for them, even though the position is still in the negative. So now I'm quickly going to show you something as we come here. But before we come here, let me show you that strategy that I'm always promoting to say, business partners, please make sure that you trade under sub-bin mode, real-time settlement. I'll click on the cube there or that box. Now you can see the third option under strategy mode there. We have sub-bin mode, real-time settlement. Whole warehouse mode is what we have there at the moment, the whole quantity that we have. But within the whole quantity, there's still position number 5. Meaning position number 5 is included in it. So, and then sub-bin mode, that is the middle one. The robot will be buying and selling for you, but it will only give you a report after the whole position gets closed, for instance. And then whole warehouse mode simply means that the robot will only sell when the whole amount has gone into a positive percentage, meaning has appreciated and take profit target has been reached. The robot will close everything. However, sub-bin mode, real-time settlement, which I promote a lot, enables you as a trader to benefit from the cryptocurrency that you are trading, even when your position is still having a negative return rate. You are able to trade extra sub-bin calls, and then those calls will be handled in real time, for instance, and then they will enable you to collect profits accordingly. And that's what I'm going to be showing. So now I'm clicking on sub-bin. At the moment, you will see that sub-bin, position number 5, it's able to trade individually. You can see 5th call here. And then you can see 5th call has its own average price, which is different to this average price here. It is different to this average price. I don't know if you can see that. Average price is 6,676. However, position number 5's average price is $6,098. So which means as the market will be shooting up, for instance, like that, what will happen is $6,098 will be reached much earlier than 6,676. It will take a whole lot more effort in terms of appreciation of the value, in terms of liquidity. It will be more liquidity will have to be pumped into this market for 6,676 to be reached. However, before even this is reached, position number 5 would have already been in profit, will already be in profit, and it's something that is very exciting. And that is why, because position number 5 is a sub-bin position, it's now able to allow you to sell its quantity, which was purchased with 500, individually, and collect profit from it even before the whole position goes into profit, which is what is very important and what I want to show you on the chart. So I'm quickly going to go to the trading view, and what we'll do on trading view, I will simply place these calls. I'll start with call number 6, with call number 5 on the chart to show you where it is on the live chart of this asset, ladies and gentlemen. And then we'll see it as 6,098. Let's quickly go and plot it. We'll use a different color on it. We're on Tradingview. We'll just use the color that appears there, which is the yellow color there. We have 6,000. I'm on the coordinates now. I'm just putting 6,070. Is it 76 or 78? Let me double check. Oh, 98. 6,098. That is fifth call there. 6,098. 6,098. So let's allow the yellow price to be plotted, and then we see. Can you see? 6,098 is the yellow, a yellow color there, which is position number 5. And then let's go to the whole warehouse position. We are going to a whole warehouse position, and you will see something there. I'm going to plot a color for that. Maybe we can make it orange. Oh, let me go to drawings. I'm just waiting for the system to respond. I want a horizontal color, and then let's go. But let's give it a different color because this is for a whole warehouse. Let's give it an orange color. And then let's look at what price this is. Again, let's remind ourselves. You can see for the whole position, the color there is 6,076. And you can see, business partners, that this market has just been static. It's not really moving much. Such happens actually in trading. Now, I hope you can see there that the average price on top there is 6,676. Now, let's go and place it. $6,676. This is a whole warehouse. Now, look on the chart. You are now able to see that the market was falling. You are now able to see that the market was going down. The market has been falling, as you can see here. As you can see here, that the market has been going down. The market has been going, we don't know if it will still go down or not, but at the moment, this is where the price is. If you are to check where with the difference, this is where the price is. This is where the price is in green. You can see the price is currently where it is now. Just for a moment, I'm going to show you. Yes, you can see where the price is now. And then now with this, this is the current market price at the moment. But the whole warehouse business partners is the whole, I mean, the position, the main average price for the whole position, it's up there on the orange line there, which is 6,076. You see, it's up there, but the market, it's not trading above here. The market, it's below this price. The market has fallen. The market has fallen. It has even broken below the position number 5 here. And this is, the market is around 5,900. This is where the market is at the moment. So before this asset can appreciate and shoot up, so what will happen is this. It means before the, or let me say, before this particular asset can reach the whole position average price, which is $6,676. This position of number 5 here, this is position number 5. You know, this is position number 5. 5th position. This is 5th position. This is 5th position. That position will be the first one. Let's say the market changes direction now. The market is, if the market is somewhere here, already this is going to be a positive percentage. Here we're going to have above the yellow line. When the price is trading above the yellow line, it means position number 5 will be in a floating profit. That's what it means, their business partners. That's what it means. So now you can see how price action moves. If you are to check nicely, you can see the readings. Remember the market we are trading? The market we are trading, business partners, is YFI. If you check, okay, if you check here, let me just get the, if you check on the, all of this on the far right hand side, these are different prices. If you can check, these are different prices. You can see on top is 7,000, here 6,800, and then here it's our average price of the main position, 6,676, you know. And then you can check now, the yellow one, it's where the price is 6,098, which is for position number 5 as a sub-bin position. So market moves up and down. And it's possible the asset that you see today trading at 5,000 at the bottom there, $5,929. Next time you can find that that asset is no longer 5,000, ladies and gentlemen. It's now 4,000 or 3,000 because it continued to fall. Such it's possible. So that is why it's important to be able to open what? Extra margin calls. If, say, for instance, you have 2,000 US dollars, and then right where you are, maybe here, where the price is around 5,000, let's say you put 2,000. You put $2,000. If you are to do that, you will actually bring the average price somewhere closer here, just a little bit above the current price. So which means it will not take too much work or too much money for your position as a whole to go into profit, because more quantity would have been purchased around 5,000 something there, you know. And as a result, the average price of the whole position will be around this red line there. Imagine when average price is so close to, check the distance, when average price, ladies and gentlemen, is so close to the market price, it means if market moves from here to up, is already, your position is already in profit. That is why we say people who have money make more money. So now there's something that I'm going to do just for a moment. Let me show you. I'm quickly going to calculate for you a return rate, which we know both the main average price and the sub average price of position 5, both of them are actually in a floating loss because the market price is below all of them. But the market is much closer to the yellow price, and the yellow price is position number 5. And it will take more money to reach the orange price on top, which is currently hidden here, but you're going to see it. So I'm going to measure the distance between the current price and the position number 5 price, and then a distance between the current price and position number, the average, the main average price on top there, where there's an orange line, and we're going to see those percentages together. Let's quickly do it, and then so that you understand this nicely. I will use a measure, or I can use a price range. I'm starting with a price range, and then let's move from the current price. I'll start from the here where the current price is. Oh, sorry. Let me delete this one for now. I want to place it according to where the current price is. Okay, I start from the orange line, and then let's go to the current price. There we go. And then let's get another one and move it to, and can you see the current price at the moment, business partners, is no longer on 11. Check. I mean, for according to where the current price is, because there's some, if you can check here, there's some movement upward. We see these candlesticks appearing and going up green, and it shows us now currently the position is having a floating loss of -10%. And if it's -10%, let's quickly check where Royal Q is at the moment. Let's check where Royal Q is. Where Royal Q is. Yes, it has updated. Look at the power of Royal Q Business Partners. I was on it. It gives you readings in real time. Can you see? It's also -10 there. It's no longer -11. And on the trading view, I'm following live chat on the other side. I'm not even in Royal Q there. I'm not even in Binance. I'm on a third-party platform, but I'm able to see this. Now, let's measure the floating loss from the yellow line to the current price. And let's see. I'm quickly doing the same price range, and then I'm focusing on the yellow. Just for a moment, sorry. Delete. I need to move it. Now let's go to where the price currently is. So now, business partners, we are getting information. So what are we learning now? We are learning that position number 5 to go into profit, position number 5 is only floating with -2.29% only. So that is why before the market can even pump by -10 to reach the main average price there on top, which is of what? Which is of $6,676. Your position number 5, which is trading with 500 position amount, it's going to go into profit first. You know, this position number 5 is going to go into profit first. That is why it's more advantageous to do what? To have money to go into sub positions so that you are able to milk this market as it happens. Now you can see, as this market, you can see from the green, I'm taking it up. Let's say the price, let's use a green color, please, on our screenshot. I'm using a green color to show you that the adventure, this market pumps. You know, let's join. If this market pumps, going up, even if it's to shoot above this, you know, before it will reach the orange line, for the whole position to go into profit, all this area here, anything above the yellow line is floating profit. That is plus, it's a positive percentage, so to speak. Anything above the yellow line, it's a positive percentage, it's a floating profit. Anything above the orange line, it's a floating profit also. So now you know that margin calls, this is how they move. If you have 6 margin calls, it means if our orange is 1, maybe you'll have more margin calls like this. All those horizontal lines indicate or represent different prices in here as the market goes down. And as the market goes up, also your position are appreciating and you are happy, you are making profits. So I think this is going to make sense to someone, and then you will then be able to have a better understanding of what we are doing here, business partners. And thank you so much for those that attended tonight. And now, just to recap, you are able to see on the screen that whole warehouse average price is the orange line of 6,676, and then fifth or position number 5, which is fifth what sub bin, is the yellow line down there with $6,098. And currently the market is having that green action price where you see 5,966. That is where the current price is. Currently is 5,974. Let me quickly take a screenshot of that. When we say current price, we mean the market price. And on the live chart, this is what we're talking about. This is the current price, you know. And then for the main position, the average price is there, the orange one, 6,676. And for position number 5, its own 5th position average price is this one of 6,098. And you can see that as the market falls, it falls for everybody who's holding the asset. As it pumps for everybody, but not everybody will sell at the same time because we all bought at different price levels. You know, some are already floating in profit, but some they're still in a floating loss, but having all different floating losses and so forth. And that is how awesome trading is, business partners. Now, at the moment, you can see I have plotted this information on a chart. I have shown you on a chart the main average price, which is this one of 6,676. And I've also shown you the sub-bin position number 5, which is 5th call, its average price, which was on the yellow line. You've seen it, 6,098. And then not only that, I've also shown you this particular current price, which is the market price. It shows us 5,900 and something there in the green. Why is it in the green? Because it is now producing some positive percentage and the candlestick is upward. If I click here, these are candlesticks, which just shows you a graphic representation of price movement. And then when I click there, you will then be able to see the things that we were actually showing you on the other side. That's why, ladies and gentlemen, even though I'm on 15 minutes time frame, we were able to see this particular green color here. And then this is 15 minutes. Let's go to an hourly time frame and let's check what's happening in there. There we go. This is what we saw on an hourly time frame, business partners. This is what we saw. That is why on the trading view, this, what is blue here, it is showing as green on the other side because it is influenced by the color of the candlestick there. So it is just as simple as that, business partners. It's trading. And then as you trade, you can see different price levels here, different price levels. Even in between here are prices, you know, they are prices, and people are buying at different price levels as this base is moving. This is the base currency that is volatile. It's not stable. It is not just horizontal or constant. No, it moves up and down like that, giving all of us opportunity to buy low, sell high, and generating profits as it happens. I'm going to take some questions, perhaps, if possible, because of time. And then this I will upload, and then I will try and share it now, actually. Not try, actually. I will share it now so that you can view this, so that when you place margin calls and you do such things, you have an understanding